the main thing that we want is our point of control currently. So that would be the most important part to reclaim, which would be that $28,000. Okay, so if that didn't happen, one of the scenarios would be coming back down, retesting our value area low, right? And the 0.5 and the 20 moving simple average. So that might be a move. So this might be a move, come back down, retest for support, you know, and then continue back up. So that is another point to take into consideration. If we move this parallel channel a little bit, expand it a little bit lower, then yeah, losing this one, this area here, would take us back all the way back to our parallel channel, which we just broke, and it would make sense to come back and retest for support, which we don't know exactly when, but we have this, you know, this support from the bigger parallel channel. So that can be another option to come back around this area, the bigger support from the bigger parallel channel and the 200 weekly. So we can again come back down and wick to it, and that would be at $26,000 area. Hello and welcome back to Coffee Infused Crypto. Today we left off on a slightly bearish outcome of our current move. So today we're gonna continue on the 4-hourly Bitcoin analysis. I'm keeping you posted and updated on daily basis. This is the 4th video in the series. Please do check the past 3. I'm gonna link the last one here, and you can just watch the last 3 to understand where we are, where we started and where we are. Definitely we started at around this area and we marked this 0.65 and golden zone, and yesterday's video we made it clear that if this wasn't crossed, we are looking for a short-term you know, pull to the downside, retest some levels, and we critically mentioned the 0.5, we mentioned the 20 moving average, we mentioned a lot of things before those happened. So go back, check them out, and today we're gonna flip from this, we're gonna look at it, we're gonna discuss it, and then we're gonna go to the macro and be a little bit, you know, positive about the outcome, because whenever you are in doubt, always remember, zoom out and look at the bigger picture. So to start things off, first of all, you need to grab your cups of coffee, definitely, and let's deep dive into the 4-hourly. Make sure to subscribe, hit the like button, and of course leave me a comment in the comment section. So I've spotted, now we have 3 parallel channels. We have the bigger one, and again you can go back and watch the videos. So we already were trading within this bigger parallel channel, right? So this is the purple one, the big parallel channel, and then we had this downturn, the second parallel channel here. If you notice, we were trading in this parallel channel. When we broke it to the upside at around this area, and now we are trading in this third parallel channel. We always travel in channels. So this is the third parallel channel. Why did we choose this channel? Because 1 interaction, 2, 3, 4, 5. So 5 on the upside and 1, and again here we have 2, 3, 4, 5 on the downside. So that's more than enough to identify the supports and the resistances on the channel, and this is how we are currently trading. And yesterday we mentioned that this is very crucial to break, because this will identify if the move is gonna be a reversal move from this bottom, or it's gonna be rejected and then roll back. We're gonna retest the levels which we mentioned yesterday, the 0.5, and then this parallel channel support, this bigger parallel channel support, and the 200 weekly moving average at 26,000 respectively. And guess what, guys? Since yesterday, yes, we failed to close a full 4-hour candle above the 6.65 at $27,409, and as expected came back down to our 0.5, 27,000, and that's how you analyze the charts. And now we are at support of this parallel channel, and this is the 24-hour moving average. So this is the 20 moving average on the 4-hourly time frame, this white line, and currently we are battling this. So we're gonna see if this fails, then definitely we know where we're heading next, to the downside and here. But on today's video, I'm gonna make things a little bit positive by just jumping to the macro. And this is very important, guys. Stick around with me. Whenever you find yourself stuck in such a situation, go back to the macro, and I'm gonna discuss this level, 25,000 level, 25,200, 300, this level, which is the swing high from our previous move right here, right? Remember this support that we were eyeing. So this comes below the 200 weekly moving average, which is a significant moving average, but this one has a particular importance. So we can find this out if we go to the Bitcoin macro, and this is what I want you to focus on this episode, to know exactly where we are. Let's strip this chart off. Let's just look at it naked. And this is one of the very early charts that we discussed on this channel over 2 months ago. So look at this. This is the monthly Bitcoin, okay? And this is the 20-month moving average. And this is the 50-month moving average, okay? So those are two macro indicators, moving averages. Those are really long-term indicators. So where we are on the big time frame. So to check exactly where we are, look at this. So we are currently here, just here between those two, between the 50-month and the 20-month moving average. The 20-month moving average is currently at 31,500. And that's exactly where we got rejected, at 30,700, approaching this white line. And we are currently, we wicked towards the 50-month moving average at 25,188. Currently, this is moving to the up and this is moving to the downside. So this will take some time to develop. This is, each candle is a monthly candle, but I just want to go back in time and check how did the 50 act and how did the 20 act. And notice something, guys. A couple of things I want to indicate here. This is very crucial. This will, the white line, the 20, if we cross, and that's exactly why we are flipping between those two, because this white line, remember, this move from here, as soon as we crossed the 20-month, we had this surge to the upside, and we're going to discuss that in detail. And then the 20 made sure to support us with this COVID crash here, and then going up the next month instantly above it, and it will remain and act as a support. As soon as we lost it, we went into this bear market. Even before that, guys, this was the bear market. When we lost the 20, we lost all hopes, and then we dipped below it. But for the majority of the run and for the entirety of this bull run here, the 20 was way below us, and that makes this 20 moving average at $31,000 approximately is of importance. That's what makes $30,000 level very important from the macro perspective. So to flip on the charts and look into details, so this is exactly what we kind of discussed. On the macro, we notice the similarities. So the similarities is, notice this top here and the bottom here, right? So this is the top and the wick to the very bottom. If we grab a Fibonacci retracement tool, our favorite tool, and go sideways, we can notice that if I remove this one just for you to see, and this one for you just to see, notice how after breaking the 20, we go back to the golden zone, spend some significant couple of months in the golden zone, and then wick towards the 0.766, and that would be the end of the move, right? 0.766 currently here, and then come back, retest the 0.65 almost, and then continue to the upside. So this is the first incident. I'm gonna re-put those levels and to check the other move here in 2017. So in 2017, if we take the top from the cycle, the 2017 cycle, into the bottom of that was around 2019, the Fibonacci, of course, again, and drag this to the side, remove this for you to see, and here, please do notice this. So we went, and as soon as we definitely flipped this, which we discussed earlier, this diagonal resistance acting as a resistance, and then we took the 20-month, okay? As soon as we took the 20-month, we went in to spend the entirety or almost, yeah, a big deal of this move was in the golden zone, okay, and we topped at what? 0.786. So we wicked to the 0.786, retraced back into the golden zone, and this is the second run, the second bull run, and this is the incident, or that was, yeah, that was the second peak, and from, yeah, that was the 2017 second peak. And we had the third peak on 2021 with this halving that occurred around this area, and definitely that ignited this run to the upside. So from here, from this peak to this bottom, this bear market of 2019, we noticed that this golden zone acted as a very important zone, and the 0.786 as a peak of a initial move after the breakout from this 20, and with having the 50 moving average always supporting us. If we take a look at the RSIs, we notice that the RSI here at the bottom, I'm gonna flip it and read the numbers here. So once we flip it, notice that the RSI is at 52.07, so you can check it here at this point when I hover my mouse, 52.7, and the stochastic was flipping from the bottom to towards the top at 44.9. So this takes a long time to initiate and to run. So remember those 52 on the RSI, 44, and then flipped into 75 on the stochastic, moving from the downside to the upside. Okay, so let's return those and move to the current zone or the current level. From our high here, from our local high to our bottom of this bear market, and this will explain everything, guys. So look at what's happening here. Currently we are below the 20, right? And as we've seen before, we spend the entirety of our move in this golden zone. Whenever we break this, we definitely having the 50 supporting us, and the 50 currently is at 25,168. You can spot it here when I hover the mouse over it, and that's what makes the $25,000 level of importance. So this is very important. As for the top side, then this is the final boss or the obstacle between us and the golden zone. And if we follow our previous cycles, which happened every single time, so whenever we flip this, we would be flipping the 0.5 as well. So with every, remember, whatever applies to the small time frames applies to the big time frame. So whenever we have any move to the downside, we tend to always go back and spend the entirety of the time in our golden zone between the 0.5, which is at 32,000, and the 0.65 at $40,000. And initially, we've on more than one occasion wicked to the 0.786, which is $50,000, only to come back and spend the entirety of our time between those two levels. So from a macro perspective, $25,000 makes sense. And this zone, this golden zone, those are the values that we or you here in the market, or the $50,000, that's where it comes from. $40,000, that's where it comes from, and 32,000. So 32 to 40 is where we should spend the entirety of our upcoming month, with a peak towards this 0.786. I hope this macro perspective helped you, and I hope you can conclude from it some things to run to the future. That's everything for today. You know, keep your strategies based on macro and just monitor the micro levels on, you know, daily basis for the fun of it or for short small trades. So that's everything for today, guys. I hope it was informative. I will definitely see you tomorrow. Bye bye.